Good evening. It is time for today's Tax Talk. I'm your host. I'm attorney Stephen Leahy. It is, what day is it? It's Tuesday, December 13th, the year of our Lord, 2022. And the question today, it is Crypto Tuesday. The crypto question today is crypto. Is it here to stay? I think you all kind of know my answer to that. But that's what we're going to talk about today. Won't you join us? Okay, there we go. I'm pushing a lot of buttons because I got something new today. I usually do this at the end, but I'm going to ask you to like and subscribe right at the beginning. Like and subscribe. We need to get this information out to people. We need your help to do that. So please like and subscribe our channel or however you're listening. So please help us get the word out. Thank you so much. And so again, today we're talking about cryptocurrency and is it here to stay? We talked about, I brought this up yesterday, the news about Sam Bankman-Fried. I always get his name. And I'm not going to give him the initials. 3 initials means like you're important or famous. I'm not going to make him famous. Although he is one of the biggest swindlers around me, allegedly. Allegedly, he's been arrested. And I just wanted to mention that. But here's the thing about this, and that's a lot of people believe that this is the end of crypto because of it. But actually, he had nothing to do with crypto, right? I think the new CEO of FTX was in Congress, in front of Congress today, and he said he did it the old-fashioned way. He swindled like anybody else, right? It was just fraud, plain and simple. It had really nothing to do with anything else. And he took your money and he put it somewhere else and he stole it. That happens that's happened with every market. But look to have them use that to bring more regulation. That's for sure. That's going to happen. They've been doing that anyway. Many of the regulators that were bought by FTX, right? The SEC guy, he was in his camp and he was paying them millions. Maxine Waters got millions from him. Loves the guy, blowing him kisses in the well of Congress. But again, he's been arrested. A lot of this is a lot of these other exchanges are going to come down too, and that's where you would put your exchanges in there, and then they would give you interest. But when someone's paying you 20% interest or 15%, and banks are only giving you 3%, there's a problem. And there's always going to be a problem there. And I think that the red flags are up. So, and again, I'm not giving you any legal advice or any financial advice or buying anything or selling anything. But I would say you probably should think about keeping it in these digital wallets rather than in an exchange. That way you have control of it. And you're not letting somebody else use it for their own nefarious needs. Just a thought. Just a thought. So, but here's a good story today. Let's see if I can get the story today. But as I mentioned, I think you understand that I am going to. I think this happened to me before, and just a thought. So, but here's a good story today. Let's see if I can get the story today. But as I mentioned, I think you understand that I am going to. I think this happened to me before, and I had to keep it down because I was on the page with the link, and the page with the link has the video on as I'm doing it because it's live. We're live. That's why. What's next for cryptocurrency after the collapse of FTX? That's what we all want to know. Well, let's go to the story. Okay. A wave of bankruptcies in cryptocurrency industry have raised concerns about the future of digital assets in general and whether the industry will make it through this market crash. First, consider the breadth of the carnage. The list of bankruptcies in the cryptocurrency market related to liquidity problems has grown substantially this year. To date, Three Arrows Capital, Alameda Research, which is part of FTX, Voyager Digital, FTX, Genesis BlockFi, and Cielo Network have paused customer withdrawals or filed for bankruptcy after being unable to continue operations. FTX, once among the world's largest crypto exchanges, collapsed after a shortfall of assets in its balance sheet. Rumors that the exchange might have been insufficiently liquid led to the customers pulling out $650 million in assets on November 7th. You didn't want to wait till November 8th. This led to the revelation that FTX was tapping into customer accounts to fund risky bets by affiliated trading firm Alameda Research. The exchange held just $900 million in easily sellable assets against $9 billion in liabilities the day before it collapsed. FTX was a leader in crypto markets, and its collapse came as a major surprise that has dented the confidence in digital assets. Holders of crypto have taken huge losses. More than $2 trillion in market cap have disappeared. The toll has, when you add up the decline in the value of Bitcoin, Ether, and all other digital currencies since they were at or near their peaks last year. Most of the recent problems are concentrated around crypto lenders, a corner of the crypto market that boomed over the last couple of years. Just like customers at traditional banks earn interest rates on their savings, crypto users that deposit their digital assets at a crypto lender or digital exchange also earn money. While saving accounts at banks offered meager returns over the last couple of years because of the historically low interest rates, some crypto lenders and exchanges offered much higher rates, often in the double digits and sometimes as high as 20%. The realities of unsustainable returns offered by some crypto exchanges and lenders have come to the forefront. Like banks, these crypto firms generate profits from deposits by lending. Again, someone offers you, they're pulling in money, and that's the classic Ponzi scheme, right? And then they're paying out the interest by using new money that people are putting in. Borrowers pay a percentage in fees for the loan, and crypto lenders make a profit on the spread between the interest payments paid to the depositors and fees paid by the borrowers. Unlike traditional regulated lenders, however, crypto companies aren't overseen by bank regulators, so there are few rules on the capital they must hold and few restrictions about what they can do with the customer's digital assets. Now, we have a lot of regulators, but that didn't stop the S&L crisis in the 1980s, and it didn't stop the mortgage collapse in 2008. So it's not a panacea. It's better, I guess, but in the end, fraud is fraud. The collapse of these crypto lenders so far has also shown how interconnected many of these firms are. FTX lent billions of dollars to affiliated trading arm Alameda Research, money that was used to fund risky bets. BlockFi, a crypto lender, had among its list of borrowers Alameda Research and Three Arrows Capital. More crypto company failures seem likely. Also, as customers worry about the safety of their digital currency deposits and demand their money back, it may be revealed that other exchanges besides FTX were engaged in sketchy trading using depositors' funds. I think that's inevitable that's what's going to happen. Banks appear relatively safe, fortunately. Combined, they held a total of $9 billion in crypto. Regulators have been warning them for years now that to be careful about investing in the asset class, and it appears the banks listened. A surprising number of retail investors own crypto and face some losses, but that exposure, while widespread, looks fairly shallow. About 10% of households in the U.S. and Europe own some cryptocurrency. In the U.S., the average holding is worth $1,000. Most European investors own less than $5,000. The real bag holders are venture capital firms, which have wagered heavily on the crypto industry. On the roughly 10,000 companies tied to the crypto business, only a couple of hundred of them are publicly traded. Most of the rest have been bankrolled by venture capitalists, who now face sizable and in some cases near total losses. So is this the end of the once booming industry? Not quite. Some of the major currencies like Bitcoin and Ether look like they're likely to endure. Bitcoin, for example, is down 75% from November 2021 peak, but is still 4 times higher than it was in December 2018. Ether, the number 2 token, is up more than 1,000% in the same period. But the major downsizing is clearly underway. Many tokens won't survive. Many exchanges and crypto lenders won't either, as their customers opt to keep their crypto in digital wallets, which usually don't allow you holders to earn a return on that crypto, but ensure their assets stay safe. The exchanges that survive will help to work hard to convince users that they aren't the next FTX waiting to crash by certifying that customer funds are secure and liquid. Eventually, more regulation by Washington to end the freewheeling nature of the crypto business seems inevitable. To survive, the industry needs the shakeout, to purge the currencies and companies that are pure hype and to consolidate around the few with potential. Proving their practical value and utility will be a lot harder now. No more easy riches. Well, that's all true, and I was having this discussion. What I forgot to do is I let's see if I can get. I forgot to look at the cost, the value today. We always look. Usually, we start the show Crypto Tuesday by looking at the markets. So let's see if I can do that quickly, and we can look at the markets. Now, I had this discussion with someone yesterday when we were talking about crypto, and they really hadn't thought through it, as far as I know. I was listening to a talking head, and but it made a very good point about the upside. There are those that are still very bullish on crypto and Bitcoin and Ethereum in particular, and they're very bullish on it, and they believe that the within a year or 2 years it will reach. Remember, John McAfee had predicted the $1 million mark. Okay, maybe it won't get that high, but it's going to get. They believe it's going to get higher, and here's why. First, let's look at the. Let us look at the market. So here's the crypto market again. Almost always, right? Almost always the Bitcoin and Ethereum look very similar. They mirror each other most days. So it's up to almost 18,000 Bitcoin. Not bad. Let's see about the last 7 days. I think it was 16 something last week about this time when we looked. Let's look at it. Today. This is Bitcoin. Let's go down. And it's up fairly good for the week. From 16,800 to 17,800. About $1,000 for the week. Not bad. And again, Ethereum's very tracks very closely. There you go. Tracks very closely. So it's interesting. But here's what I was talking about now. Why they have such a why they're so bullish on it, and I don't think a lot of people have considered this. The retail market is vast, right? And the use of credit cards is ubiquitous in our society. Well, retailers incur about a 2 to 3% or more fee for using credit cards and debit cards. Where if you're using crypto, you can get rid of that 3%, and you just took crypto. It would get rid of that 3%, and that's a huge market. That's what's driving the cost. And that's what will drive the value of crypto higher, they say. It makes sense, right? You have to have some economic value in these things rather than just be a investment vehicle, because it turns out they're not a very good investment vehicle. Or are they? They will be if they become useful. If the value keeps going up and up and up and up, I don't believe it ever will be useful, because we need stability. You have to be able to get something in value today and turn around and use it to buy something of that value tomorrow, right? If I do some work and someone pays me in crypto today, and I can buy, let's just say, I can buy a loaf of bread with it, but tomorrow I can only buy a half a loaf of bread with it. Well, that's not going to work, right? It'd be nice to buy, again, if it's going up higher, then I can buy 2 loaves of bread. But the person that paid me, right? They could have. It's on both sides, right? So the numbers have to be more stable to make it work that way. But again, I can understand why people are bullish on it still, even with the collapse, even with all of the bad press that it's been getting recently. So that's where I stand on it. So thanks so much for joining us. I already did the share and subscribe. So now I'm going to just ask you, hey, if you have IRS problems, do you owe the IRS money? Do you have unfiled tax returns? And you don't know what to do? Here's the first thing you should do. Get a copy of my book, Deal with Your IRS Problems Today. Go to freeirsbook.com. That's freeirsbook.com. Get your free copy. I'll pay for the publishing. I'm going to ask you to pay for the shipping and handling. It's a small shipping and handling fee, under $10. And in return, I'll give you the book and a bunch of bonuses, that are included in the package that I send out. So go to freeirsbook.com, order your free copy. So thanks so much for joining us here on today's Tax Talk on Crypto Tuesday. We'll be back here tomorrow, and I hope you join us. God bless, and we are out.